far in crypto's pretty brief history as an asset class, it's generally done very well in rising PMI environments, and then very poorly in falling PMI environments. With the caveat that because it's kind of closely tied to liquidity. Usually liquidity changes before PMI, and generally we've seen that in crypto as well. Usually Bitcoin bottoms before PMI bottoms, but there's still generally a pretty tight correlation there. And so as a risk on asset and as an asset that's very closely tied to liquidity, this has been a very rough environment for it. And it's been compounded by the fact that there is so much leverage in the system. And so it started with as liquidity gets pulled out, first you see which types of Ponzi type of assets break. So the high profile one was Luna, but then that had contagious effects for more traditional parts of the market that were just over leveraged and over their skis into all sorts of other projects. And so we've seen a lot of forced selling, liquidations, capitulations, which after kind of months of being more cautious in the space, I'm actually quite bullish here. Now I think that we're still in a declining PMI environment. It's still kind of a very uncertain period for the next, call it 6 to 12 months. But I think that it's actually been de-risked compared to, especially from a contrarian perspective, compared to where it was, a year ago. And for me, structurally, I'm pretty bullish on Bitcoin and some of the Bitcoin startups, the ecosystem around it. I think that original innovation is actually something bringing new to the table in terms of payment systems and portable value transfer, and compared to other projects we see in the ecosystem, that was actually pretty decentralized and pretty hard for any sort of entity to change. Whereas what we see a lot of elsewhere in the crypto ecosystem, you see a lot of projects that are, they market themselves as though they're decentralized like Bitcoin, but they're actually quite centralized. And there's still a regulatory gray zone where it's kind of like an environment where penny stocks can market themselves to the public. And so you're going to get a lot of scams, you're going to get a lot of frauds in that sort of space. So my general message to investors is really kind of to focus on the signal over the noise, and that Bitcoin offers something of value to a portfolio, potentially Bitcoin startups as well. Whereas I generally am a lot more cautious about the broader crypto space. I think that, when you look at those crypto bull cycles in history, usually the same projects that do well in one cycle aren't the same projects doing well in another cycle 3 years later. It's like a rolling set of new participants, with only a handful of ones kind of steadily gaining value cycle after cycle. With Bitcoin obviously being the front runner there. In the broader space, I do think stablecoins are interesting technology that anyone involved in payments has to be at least aware of. But yeah, for me, it's really Bitcoin and stablecoins that I think actually have kind of utility here, and a lot of else what we saw. There's hints of something there, but I think a lot of it was just speculation, circle leverage, kind of recursive leverage, that sort of thing.
So when you talk about the stable coin too, I got to come back to the macro and say, what are your thoughts on the central banks issuing their digital currency, or is that just masquerading it as fiat once again?
Oh, that's certainly a type of fiat. It's just fiat on different rails. And I think, that this is still early in the story being written. China's obviously been ahead of the curve. Their goals are more in line with the CBDC, and then also they started earlier, so they already have a launch there. Other central banks are further behind, and some of them might go the route of public-private partnerships, right? So they can essentially turn a stable coin into a CBDC, right? Instead of managing their own. They can partner with a highly regulated stablecoin issuer and use that as their rails. So essentially what CBDCs are, there's different formats they can take, but they are more programmable types of fiat money. And so, for example, if a stimulus wanted to give, if a government wanted to give people stimulus, but you can only spend it on energy or food, for example, it can be programmed that way. It can be programmed to have different interest rates in different areas. It can be programmed to be used in certain jurisdictions. You can, in some jurisdictions, if they want to go the extreme route, they can go around the whole banking system entirely. That's obviously very controversial. So there's different formats that can take, but it's a different type of fiat currency. It's applying that to 21st century rails.
Yeah, it's funny you mentioned that too, because, as you think about the central banks, their goal is to regulate the banks as well, right? And so it is, it is kind of against their end clients' interest, right, to do that. And you also mentioned the stimulus. I think it's pretty amazing that there was just a fine levied to one of the large banks. I won't call them out today, but for misappropriating the funds of the stimulus, right? Of using the debit cards and everything in an inappropriate manner. So, I think it does illustrate the need for, when you do this, these type of programs, how you get the money to people. And the last time, the backlog during the pandemic, and obviously we got it going pretty good after we did it the first time, was really just getting it to the end user, right? They had to go through the banking system itself, and so it definitely is something that is interesting. And I just want to tie that back to one more thing too, because you were talking about the devaluation of the currencies and everything too. Have we seen the death of MMT? Is this the case study where we talked, MMT coming out, the modern monetary theory coming out, and did it really lead to this inflationary side? Or what is your take on MMT? Something I haven't talked to many people about lately.
Well, I think it's, the fiscal. So I've been emphasizing since before the inflation happened that the fiscal side is the thing to watch. And so it's not just what the Fed's doing, it's the actual kind of helicopter money and that sort of thing that we saw from Congress. And I do think that going forward, policymakers are going to be a lot less likely to touch that. But to MMT's credit, I mean, their point always was that you can stimulate up to the point of inflation. That is ultimately the constraint. That you don't run out of money, you run out of the value of money, right? And so it's about using those productivity. I think the partly it's the size of the stimulus that we did that was inflationary, but then it's also the whether or not that was productive. And so if you go back to, say, the 1940s and all that wartime financing, a lot of that wartime financing was actually domestic stimulus. You were building up factories. You were, when the soldiers came home from the war, you did GI bills. So you got like 8 million of them educated. You gave them it was kind of like PPP loans, where you gave them basically backing for their mortgage, make sure that their interest rates were low. But a lot of that was productive. I mean, so you had this inflationary spike, but then we got a lot of new stuff because of it. We had new factories, we had new commodity production, we had an educated workforce, and that's actually disinflationary. That's kind of the platonic ideal of MMT. Whereas what we got this time was, a lot of money out there. A lot of it went to PPP loans that turned into grants for, pretty wealthy business owners that in many cases were not even planning on laying off employees. It just wasn't very targeted. And at the end of the day, we have a lot more money in the system and not a lot more stuff in the system. And so that's both the magnitude and the type and how it was done. And so I think that shotgun approach is probably behind us. I think that this decade, whenever you have shortages or things like that, we could see more targeted fiscal. I think that now that the interest rate lever is less effective than it was, I think that fiscal might be a bigger tool that they resort to, but I think they're going to be more targeted. So things like energy stimulus that we see in Europe and some states, for example, basically giving people taxes back on their fuel costs, or giving them checks that can be used for that sort of thing, or to offset that. I think that's going to be more common going forward. But I think we saw that, there are limits to how much money you can print before you cause inflation. And I think there's always recency bias. So in disinflationary environments, people have a tough time imagining how you get inflation. And in inflationary environments, you have a tough time imagining how you can ever get back to disinflation.